Hello, welcome to Mr. Chino Comprehensive Crypto Trading Masterclass. I am Adam Shinobi Chukuma. We are still on the beginner's model. So today we are going to discuss the third topic, which is creating a store of value. In this course, we will explore how store of value is created using distributed ledger technology. At the end of this course, you will understand what makes cryptocurrency investment worthy. And you will know what indices you need to look out for before investing in any cryptocurrency for long term. That is, anytime that you want to buy coins for holding, you need to use these indices to run through these indices. If that coin didn't meet up to at least 80% to that to that shake within that checklist, you use that the indices as a checklist. If you tick and you find out that the coins didn't meet up to some of these indices, then that coins you need to have a rethink, because there are some cryptocurrencies that, because of certain indices which I'm going to share with you in this course, it's not advisable to invest in them. Such coins are likely to lose their value within a short period when out of circulation. And if you invest in this kind of coins and it happens that they lose value or delisted from various exchange platforms, you will lose all the invested fund. For instance, you will use like 500,000 to buy this coin, and then after some months you hear that the exchange have delisted this coin because it's a scam coin. Definitely that 500,000 is gone. And if you invested in this kind of coins and it happened that they lose value or delisted from various platforms, you will lose all your invested fund. That is it. This have happened many times within the cryptocurrency ecosystem, and most of these coins are basically created. That is, they are basically created to scam investors, because a lot of people know that there's the regulation framework there's no proper regulation framework within cryptocurrency ecosystem, being that it is a nascent, a developing sector or a developing economy. There's a lot of the regulatory framework have not been put in place in order to prevent this kind of activities. So it boils down to you being knowledgeable and informed in order to avoid you falling a victim to such kind of illegal activities. You need to be very smart and always do your research before investing in any coin. Always do your research. Don't invest in a coin because people or there is a hype around it. Always do your research, especially when you have long-term plan for that investment. I know you have an unanswered question in your mind right now. Yes, I know, because we are on our previous class, I said that cryptocurrency have no single point of failure. So coming on this class and saying that there is a scam coin that normally goes out of circulation or delisted from the platform, it sounds a little bit that I'm contradicting myself. So I will try to, yes, there is a scam coin, but it's not because of a single point of failure. No, most of these scam coins, in fact, most of them have no blockchain. Is not built on blockchain infrastructure, and most times most of them doesn't have what we call, is not supported by crypto projects. So scam coin literally refers to useless cryptocurrency that is not backed by viable cryptocurrency projects. They add no value to the ecosystem, but they take away huge chunk of investors' money. We will discuss more about this scam coin later. Now let's look at what is cryptocurrency project and what makes a project viable. So what is cryptocurrency project? This is simply a technological solution built using distributed ledger technology and blockchain technology. A viable project is a project that is developed to solve real market friction, supported by sound use cases. Though not all projects built using blockchain or distributed ledger technology end up being traded as a cryptocurrency. In fact, none of the projects is traded as a cryptocurrency. Rather, their tokens. Example, Ethereum. We have heard about Ethereum. Ethereum is a technological solution built using blockchain technology that offers alternative financial solutions within crypto ecosystem. This project have a token called Ether, which is used as a store of value or a means of exchange. This also applies to Cardano, which solve the same problem the Ethereum project is solving, creating alternative financial solution that is decentralized. Cardano token is called ADA, ADA. Yes. So if you find out that a crypto project is created, then a token is then derived out of that project, and that token is what is called cryptocurrency. So Ethereum is a network or a crypto project. Ether is a cryptocurrency that is a token that is derived from that is backed by Ethereum. Most long-term investment-worthy coins are tokenized viable crypto projects. That's what we call tokenization. That is creating cryptocurrency from viable crypto projects. So what does it mean to tokenize crypto projects? To answer this question, we need to understand what is tokenization. So we look at what it is. What is blockchain tokenization? So here we find out that amazingly, not just cryptocurrency that can be tokenized or tokenization. You can tokenize fine art, land, technology, gold mine, and real estate. We will discuss more about blockchain tokenization and opportunities within you can explore within blockchain tokenization. So what is tokenization? Asset tokenization brings real world value to blockchain. So it's the process of converting physical and non-physical assets into digital token on a blockchain. That is what is called tokenization of crypto project or asset tokenization. So if you want to make it broad, if you want to broaden the scope, you use asset tokenization, because I say that not just crypto project that you can tokenize. You can, in fact, there's a whole lot of opportunities that you can tokenize any asset and then unlock the hidden treasure within that asset. For instance, fine art. You can tokenize a fine artwork, and then bring massive, huge wealth out of that find out. Also, the same thing applies to real estate. So let's just look at tokenization, how this is done, and then how this is done, and then from there we will understand everything about asset tokenization. So I will focus more not just on crypto project tokenization. I will make it broaden so that I will include other form of tokenization happening on blockchain. So, also there's two different kinds of tokenization that you need to understand. There are a kind of tokenization which is called a traditional tokenization, which doesn't happen within blockchain technology. And this kind of traditional sense is done around data. So, but blockchain technology tokenization focus on assets. So the traditional tokenization is focused on data. So like the one they use in banking, they give you a token. So in the process, maybe you have an online bank, you subscribe for online banking service, and then they will give you a kind of device that each time you press that device, it will give you a token, and through that token you can log into your online banking platform. So that is different from the kind of tokenization we are discussing. That kind of traditional tokenization is simply data tokenization. Now when it comes to blockchain, we are discussing that we are more focused on asset tokenization. So by asset, I mean creating cryptocurrency or token or coins. So how does we create store of value using tokenization? So the real store of value is created using tokenization. So how does this thing happen? So note, blockchain tokenization is not limited to crypto projects. In fact, you can tokenize any physical asset ranging from real estate, farm, artwork, diamond, oil field, to unlock wealth that before now that is not accessible using tokenization. Before now, there are some like farm, a lot of farm have real value that is not accessible. But when you tokenize that farm, you'll find out that the worth of that farmland will increase. That's what I mean by unlocking wealth. So tokenization gives us the privilege to unlock wealth that before now it is not possible to do that. That's the beautiful aspect of technology. Okay, let me explain. Suppose there is a 200,000 apartments, that is a real estate. Tokenization can transform this apartment into 200,000 tokens or more. These tokens will be issued to investors, mostly retail investors that before now couldn't afford to invest in the real estate. By buying the token, the individual will have some percentage ownership of the main assets. Obviously, you are not becoming a legal owner of the property. However, because blockchain is a public ledger that is immutable, it ensures that once you buy token, nobody can erase your ownership, even if it is not registered in a government-run registry. So what this thing means that, for instance, I have a real estate that I want to sell, and I need to sell this real estate, but the investors doesn't have money, and normally investors doesn't come and crowdfund and buy real estate. For instance, maybe assuming that I'm into luxury real estate, that I built a real estate that a block of flat that costs over $200,000, and I need to sell this block of flats, and there's no single investor that is coming forward to